Is Evergrande China's Lehman Brothers moment, the calm before the market crash? What I can answer is that Evergrande owes a ton of money to lots of people and they could collapse because of it. But will their collapse lead to a market crash? That's a more complicated question than I thought. But today, I'll go through all the necessary details for you to make up your decision on this. But in my research, what I've found is missing in this whole discussion is the answer to the most critical question. What does this all mean for you? And what should you do next? Is a market crash coming and you need to sell all your stocks? Is this an opportunity to buy a lot of companies at a discount? And if so, what companies? Lots of questions, and luckily, I have the answers. But the best way to always get the answers is to like and subscribe to this YouTube channel. This is all my opinion based on the research that I've conducted, but it doesn't constitute financial advice. And as always, you should always do your own research before making any financial decisions. Time is money, and I don't plan on wasting yours. So let's get into it. Okay, here are the hard facts. Evergrande is China's second largest property developer. They are present in over 280 cities with over 1,300 real estate projects. Evergrande has accumulated $300 billion in debt. Evergrande also owes $103 billion to construction companies and other business creditors. Debt can be good if you can pay it back. But with Evergrande, it's unlikely. Property sales have been declining for months and will continue to fall. Banks have stopped lending to them and now they can't pay their suppliers. And what's been their response? Offer some property, offer some parking spaces. But Evergrande's social currency is lower than their cash flow and people want money, not assets. So Evergrande are warning, we're gonna default on our debt. And now you're probably thinking,
isn't real estate too important? Isn't Evergrande too big to fail?
And you're right. Real estate is really important to China. Real estate contributed up to 30% to the Chinese economy, according to the National Bureau of Economic Research. But that doesn't mean the Chinese government is going to play ball and bail them out. And you're probably wondering, why not, Jordan? If they don't, won't it ruin the global economy? Well, while the Chinese government does care about stability, they face the same dilemma that parents have when they're considering giving candy to a child to calm them down. Saving Evergrande could incentivize more bad behavior from Evergrande or other companies, and China doesn't want that. This is what economists call the moral hazard of companies. This is basically talking about the increasing risky behavior that companies make when they think that the government or another party will bail them out of that trouble. If you've been following the news or my YouTube videos with Alibaba, the Chinese government have been cracking down on their other naughty children as well. This includes online video game companies and tech companies like Alibaba. China has introduced its 3 red line policy, which basically makes companies deleverage and reduce their risk. Bailing out Evergrande would fly in the face of this policy. China has also created the Common Prosperity Fund, trying to bring equal wealth distribution across the country. Bailing out a multi-billion-dollar company with the people's money doesn't really fit that agenda. Okay, so this huge company is going to fail, and the government isn't going to help them out. Will this cause a crash and affect you? Huge question. Let's get into it. There is no doubt that Evergrande failing will affect the Chinese economy. As I said before, real estate makes up 30% of the Chinese economy. This will hurt developers' pockets. This will affect local governments who sell property to local developers. And this will hurt the whole middle class, who will have less money to spend, which will shrink the whole Chinese economy. But you're probably not the Chinese middle class. So how will it affect you? In a worst case scenario, call it denomination doomsday, Evergrande related stress could spread across the world's financial markets and freeze credit markets across the world. This is where some people are describing it as China's Lehman Brothers moment. I think that situation is a bit of media dramatization, but it will have some rippling effects. You should expect more turbulence and uncertainty. Between September 2nd and September 20th, the S&P 500 fell by 5.2%. Companies that didn't seem that closely connected to the Chinese real estate market fell. Think Twitter and eBay. And I believe this could be a growing trend across other companies.
But why is this happening, Jordan?
Well, Art Hogan, chief strategist at National Security, made a really interesting point. He said, in a risk-off scenario, everything tends to be for sale, even cryptocurrencies. Basically, he's saying when the market panics, the market really panics. And look, I'm a firm believer that markets are efficient. Eventually. Big news events like this can send temporary shocks to the market, causing big inefficiencies, including selling off stocks that aren't really connected to the actual crisis. So, while Evergrande might not break the economy, it could be the straw that breaks the economy's back. And to be honest, right now, the US economy isn't looking that great. Consumer confidence has dropped to a 6-month low. Inflation is rising and US politics is causing some economic issues. Congress is currently debating a $3.5 trillion social program bill, in addition to the $1 trillion infrastructure plan, but it'll soon need to raise the limit on debt. And to be honest, it's pretty unclear if Republicans are on side to help. Should the US economy slow down and not get any fresh economic stimulus, some analysts are saying that the whole stock market could drop 20%. An Evergrande collapse could really do some further damage to this. But before you freak out, Evergrande's effects are pretty uncertain. But then, before you don't freak out, these uncertainties are causing panic, whether rational or not. Okay, now let's answer the really important question. What does this all mean for you? And what should you do next? At this point, we know Evergrande is a huge real estate company on the brink of collapse. The Chinese government are pretty unlikely to step in, and if they do, it won't be just a simple bailout. If the company crashes, this could be felt on a global scale. It will definitely be felt in China. This could mean panic selling of stocks, whether that's rational or not. So, should you start selling your stocks? No way. Let's get into that. Falling stock prices and a market correction. Falling stock prices and a market correction could actually be great buying opportunities and increase trading activity. One thing you should always keep in mind: there will always be an Evergrande type of risk in the market. These type of risks give you excess return. Dealing with and ignoring these Evergrande types of risks is the stock market game. I've actually spoken about these market risks in another video, link up top. So if you're going to sell any stocks because of the Evergrande issue, I would make sure any movements in your stock portfolio are really small and really well thought out. Be thankful for the risk and try to visualize the return you'll get 3 to 5 years out. For example, for me, I see the China crackdown as a great opportunity to buy stocks like Alibaba at a huge discount. I've made a video on this in my previous video, link up top. And the last thing you need to know that's really important: Evergrande is a reminder of the importance of diversification. The diversified investor should only have about 2.5 to 4.5% invested in China. This protects you from singular market shocks like this. I've gone through 4 ETFs that can give you global exposure, link up top. But even if you are invested in China, the worst impact is going to be short term, which to be honest is probably going to only be small. And that gets even smaller in the long term. The world economy will be really strong with a healthy China. But with a weaker, sicker China, the world economy will still grow and give those who have a long-term investing approach great returns. The market crash storm might be coming in soon, but if you're a smart investor, you've built your portfolio in a way that defends against crazy big wins. The Evergrande situation is a little bit overhyped. It could cause some market shocks and send some stocks south. But for me, next step, invest in some golden buying opportunities like Alibaba. And don't forget to like and subscribe for more investing content like this so you can stay across the news and how it relates to you and what you should do next. Again, this is my personal opinion and not financial advice, and you should do your own research before making any financial decisions. Make sure you check out another video here, or here, and I'll see you again soon. They face the same dilemma that parents have when they're trying to give candy! Mama, mama, me. Mama, mama, me.